HMRC are actively grabbing money out of your business in ways you probably don't know about, and it is the government who has given them the powers to do it. So if your business owes HMRC money, you need to understand what they can do in 2026 to get that money back. Now, by the end of this video, you're going to know exactly how HMRC are taking money from your business, what they do openly, what they do quietly, and grabs almost no director sees coming until the money is already gone. Now, one of them is a power HMRC has that lets them lift money straight out of your business bank account into theirs. And most directors have never heard of it. And it's being used against businesses like yours all of the time. And there's one thing you can do at any point in this process that stops the grabbing dead. And most directors don't do it because they're too frightened. Now let's start with a grab that you can actually see, okay? The first way HMRC takes your money is the one you can see coming. Usually it's an HMRC officer at your business or a note through the door telling you that they've been. Now this is the grab that most directors picture when they think of HMRC coming after them. Somebody stood in the reception of your business or at your home address if your business is registered at home. Now, let me tell you a story. Call him John, right? John is a builder, he's got behind with HMRC, and he had spent months telling himself that he had time, okay? So he's getting letters, he's getting phone calls, he's not wanting to deal with it, because in the past, John has sort of kicked this down the line for 12 months, 18 months, and then dealt with it. Then he's got an HMRC agent in his yard, stood in front of him, notepad in hand, looking at the equipment, the vehicles, and he's writing things down on a clipboard. Now, John froze and he signed things that he shouldn't have signed straight away, because what that officer was doing was preparing a controlled goods agreement. And in plain English, it's a document HMRC will use to list your business assets. And once you sign it, HMRC takes a legal interest in it. Basically, if you don't pay your money, they're going to take them away. So he had the vans in the yard, he had the machinery in the workshop, and he signed it. Now, the HMRC don't take your assets that day, but if you don't clear all the arrears in a time that they set, and it's generally quick, they come back and they take the lot. It goes to auction, and normally it sells for a fraction of what they're really worth. And if you don't get enough at auction to clear off the HMRC tax bill, guess what? Your business still owes the shortfall. But now you've got a shortfall in tax and you've got no assets. So it's normally game over. Now, the mistake most directors make is they sign it in the moment. And they sign it out of politeness. You know, they're shocked and like, yeah, I'll sign this, no problem. Now, the officer's probably going to be calm. Paperwork looks routine. Please, slow down. You can legally ask for a bit of time before you sign anything. Might even just be an hour. Step away, ring someone who deals with HMRC every single day and get advice before that signature goes on that document. The lesson is this: the visible grab is the one you can see coming, but it's also the ones directors sign away without thinking. The control goods agreement is one of the most consequential pieces of paperwork you're ever going to be asked to sign. And the officer at the door is not going to be the one that explains it to you clearly. So do not sign on your doorstep. Take an hour. Understand your options. Now listen, if anything I've said so far has made you think, I perhaps need to speak to this guy or his team, go to the description, comment section, top link, put your details in. One of my team will call you today. We're free, we're independent, we've got over 760 5-star reviews on Trustpilot, and we'll help you understand what your options are, okay? If you don't want to talk to somebody, I kind of get that. The second link will give you a free guide to insolvency, and I just want your email address so I can stay in touch with you, right? Anyway, back to the video. That was the grab that you can see. There's another grab that where if you don't pay your tax, they can literally just take it out of your bank account. Now, if HMRC in the past wanted to force money out of your business, they generally have to go to court. There'd be a judgment, a winding up order, there was a process, and, you know, it took time. Listen, that's changed. There's a piece of law called the Direct Recovery of Debts, DRD for short. If you ever see that acronym on a piece of paper, you need to be worried. And it gives HMRC the power to lift money directly out of your business account to pay a tax debt. Now, before you panic, there are some safeguards, right? For HMRC to use a DRD, the debt has to be at least £1,000. You must already owe the money with no disputes and no ongoing appeals. HMRC must have tried to contact you at least 4 times to give you a chance to sort it out. And they've got to leave at least 5 grand in your business account after they take what's owed so your business doesn't collapse the same day. But the reality is, let's say you're a multi-million pound business, having 5 grand in your bank account isn't going to do a great deal, is it? And most importantly, you get 30 days to object before the money actually moves. Now, these safeguards, they are helpful, right? But they're assuming one thing, that you are receiving and reading HMRC's letters and that you've had 4 chances to engage. But if you have a registered office that you've stopped paying, or you don't open brown envelopes and you go quiet, listen, by the time HMRC exercises a DRD, you've burned through every safeguard that they've set out there, and the first you'll know about it is when you log onto your bank and the money's gone. Now, the lesson's this: the direct recovery of debts is very real. It's happening all the time. HMRC can reach into your business bank account without a court order, and there are safeguards to stop them doing it, but it depends on you engaging with HMRC. So every letter that you don't open, every phone call that you dodge, it's no longer buying your time. What it's doing is spending your tokens, your safeguarding tokens. So please, open the post. Answer the phone. Silence has a real cost in the world of HMRC in 2026. Now, the next grab is a quieter one. It's happening right now, literally this second, to every director out there who owes HMRC money. And most of you are badly underestimating how much this is costing you, because there is a grab HMRC does every single second of every day that you owe them money. And most directors treat it as if it's not really happening. Your HMRC debt isn't a fixed number. It grows. Because HMRC charge interest on unpaid tax at a rate that I think is quite painful nowadays. It's linked to the base rate plus a margin. In real terms, you're looking at about 8% on the debt, okay? But then there's penalties. So if you're late paying, there are separate charges that climb the longer that your money stays unpaid. And if you're late filing, that's got its own separate penalty system. And once your points build up, they trigger a fine of their own. So you've got one debt that's getting whacked from 3 angles. You've got interest running against the balance, late payment penalties climbing, and late filing points accumulating. So I had a director, he spoke to me, he only thought he owed about 30 odd grand. Okay, because that was on a letter that he'd received a year ago that he'd actually opened. Now, when we helped him understand this position and got the current balance, the debt was closer to £45,000. Interest had run for a year. Late payment penalties had climbed. He hadn't taken the call and he hadn't opened the letter since. And while he wasn't looking, HMRC have quietly added £13,000 to what the business owed. That's the daily grab. Grab is getting bigger while you sleep. Now, the lesson's this: every day you delay dealing with HMRC is costing you real money. And it adds up in a way that's going to hurt you in the end. And it's faster than most people realise. The debt isn't sitting still while you work up the courage to face it. It is growing from 3 different directions at the same time. So the moment you know you've got an HMRC problem, genuinely, the cheapest thing you can do is act. Every single week you wait, the number's going to have to get bigger and bigger before you deal with it. Now, these grabs that I've shown you happen at sort of different speeds. The next one happens at once, and trust me, this is the catastrophic one, and it is happening more than ever before. Now, the final grab is the one that takes everything at once. It's called a winding up petition. And most of you guys and girls seriously misunderstand how it works. So, because you'll hear the words winding up petition, you think, right, I've got a court hearing at some stage in the future. And yeah, if I don't sort it out by then, yeah, that's where the damage is going to happen. Now, the damage happens the day that petition's filed. Because guess what? Once HMRC files it, a few weeks later, they're going to advertise it in something called the London Gazette or the Edinburgh Gazette if you're in Scotland. And then your bank account's going to get frozen and it becomes public. So I'll tell you what that looks like, right? Mike ran a contracting business. He owed HMRC about 60 grand, VAT and PAYE. He'd ignored letters for the best part of 10 months, right? And when I spoke to him, he's like, listen, Chris, in the past, I had loads of time. You know, he was under the impression that there's no way HMRC would wind someone up for £60,000. And it's like something that I probably shared with him 12 months ago. But guess what? HMRC did. They filed a petition. But Mike had stopped opening the letters, so he wasn't aware of it. The petition was advertised in the London Gazette without him knowing. Where he found out is he's gone to try and fill up with fuel. Card was declined. So he's rang the bank and the bank told him, your business account's frozen. There's money in the business account, but you can't touch a penny of it. He then got put on stop with suppliers and he tried to explain it. But they'd already been told that there's a winding up petition live because the credit referencing checks had picked it up. So the suppliers put him on stop. He had no access to the money in the bank. And 2 of his customers rang him that afternoon because they'd been made aware of the advert too and they were pulling upcoming jobs. And to add salt into the wound, payroll was due at the end of the week. And he couldn't pay people because he couldn't access the bank account. Now, all of that happened before the court date, before any decision was made. And when you get served a winding up petition, everyone is going to find out if you don't move quickly, okay? Now, Mike's story didn't end there, right? We did manage to save a lot of it, but it took, honestly, urgent action. There was literally days, and we used moves we'll talk about more in another video, but in essence, we got a solicitor to speak to HMRC's solicitor and say, listen, will you allow us to put this company into voluntary liquidation instead of you winding us up? There were still loads of problems. The money was still frozen, but at least he was able to sort of put it into liquidation on his terms, right? But if you get to a point where HMRC files a petition against your company, the destruction has already started. The lesson is this: the winding up petition isn't a court date where something's going to happen in the future. It is an act of demolition that is getting scheduled for the future, but by the time you get there, your business is very often already over. So if you owe HMRC money and you haven't dealt with it yet, understand that the winding up petition is sort of the pinnacle of what they're going to do to you. And every other grab I've mentioned in this video is designed to get you engaging with them before they resort to a winding up petition, which kind of brings me to the bit that pulls all of it together. Because everything I've shown you, from the officer at the door to the frozen bank account, has got one thing in common. And there is a move that you can make that stops all of it. And it's the one that I promised you at the start. Now, everything I've shown you happens for one reason. HMRC feels like they've got no other choice. The enforcement, the direct recovery, the daily interest, the petition, all of it comes into play when HMRC has stopped believing you're going to engage with them, okay? Now, the move that stops the grab, and I've watched this work thousands of times for directors, is simpler than you think. It's proper engagement. Specifically, a well-prepared, realistic, time to pay arrangement put to HMRC either by yourself or ideally with someone who knows what they're doing. Now, a time to pay arrangement is a formal agreement with HMRC. It clears your arrears in instalments over months, but in most cases years, instead of all at once. Now, you've got to earn it with HMRC. They won't just accept a fantasy number, but if you go in prepared, they'll accept a serious one. Now, when you've got a time to pay arrangement in place, several things will happen all at the same time. Firstly, enforcement action gets paused, right? The direct recovery power comes off the table, and the idea of getting wound up is stopped in its tracks. Now, interest and penalties might still accrue, but now your debt's got a plan attached. Let's call her Sarah. She come to me last year on the edge of exactly the scene I described, okay? She'd been ignoring letters for months. Enforcement agents had been to the premises and she'd basically been told, we're going to give you a 7-day letter warning of a winding up petition. They're literally going away to prepare the petition. It genuinely looked like she had days. Now, we didn't argue with HMRC. We helped to build a proposal, real cash flows, realistic figures that she could pay every month, even on a bad month. That's an important point. And there was evidence the business was still viable. And HMRC agreed to 2.5 years. Petition never got served. Business is back on its feet. Same debt, same director, completely different outcome. And the difference was the switch between getting flipped from silence to engagement. Now, to earn a time to pay, there are 3 things that got to be true. Every return has to be filed, even the ones you can't pay, right? Number 2, your numbers have got to be realistic. And number 3, you have to be willing to have what can be a really uncomfortable conversation, or have someone do it on your behalf. Now, the lesson's this: HMRC is aggressive because most of you guys and girls go quiet. And when you do, HMRC doesn't know anything other than you're a walking risk. And every grab that I've shown you in the video is aimed at recovering money from a director that they've decided isn't going to pay. The moment you engage calmly with a plan is often the day it all stops. Now, when you press play, HMRC might have felt like a machine grinding forward at you with no way of slowing down. I hope you can see that it isn't always the case. They've got lots of tools, and yet, listen, the tools are getting sharper, but every one of them is aimed at directors who have gone silent. Now, if you're behind with HMRC, you can feel it coming. The most important thing you can do is get the conversation started on your terms before HMRC starts it on theirs. So book a call with my team. We'll go through your situation, what your actual numbers are. It's free, it's confidential, no judgment, no jargon. And we do it every single day. Now, I hope you found the video useful. And if you want to find out more about a real life time to pay arrangement, what to say, what not to say, and how to prepare your offer, go and watch that video on a time to pay arrangement. Thanks for your time.